It's important to understand what type of trader you are. Some people get too lost in the strategy and they don't focus enough in their own life and their own personal preferences. You cannot be a scalper if you have to commit to a 9-to-5 job at the session open or session time. So you have to figure out what's better for you, whether it's day trading or intraday trading, or if it's swing trading. So what we're gonna do is we're gonna go through some of the pros and cons and the differences between day and swing, and we're gonna see what best suits you and your trading style. Guys, in regards to day trading versus swing trading, there's a few key things that you need to understand and understand the difference. So day trading, FX, simply means from the 1 minute to, I'd like to say, the H1 time frame. In the sense of time frames, what it really means is picking one session and trading it. Let's say you're a European, you live in the UK, you're more than likely trading London session, or maybe you're trading New York, who knows, based on your schedule. Day trading, in my terms, it simply means that you're taking trades within the same day. Day trading simply means opening a position and closing a position within the same specific day. Now, in regards to swing trading, this means you're trading H1 and above. This means you're not taking many positions. When it comes down to day trading, let me go back to this. Day trading, you're opening and closing multiple positions within the same day. Swing trading means opening a few positions a week, right? Sometimes when I swing trade, I might take 1 or 2 trades for the entire week, but if those trades play out and they end up swinging, not only do they pay out multiple pips, hundreds and hundreds of pips, but they also deliver a high RR. You know, high RR in your terms, you know, at the end of the day, I see people flexing online. Oh, I caught this 1 to 20, 1 to 30, 1 to 100, blah, blah, blah. I mean, to be honest, I've never seen anybody consistently prove their results on high RR trades. It's a very sexy concept, but I mean, to be honest, I never really seen anybody consistently do it. Have I hit high RR trades? 100%. But is it every day? 100% not. So when it comes down to it, getting a high RR, in my opinion, is anything above like a 1 to 4 in the sense of swing trading. So swing trading, 1 hour and above, it's opening a few positions a week, and you're taking positions, and sometimes those positions can last a few days. Sometimes those positions can last from this week into the next week. The biggest things that I can say in regards to day trading versus swing trading is you could be using the same strategy, but it's on the time frames you're trading on. People that day trade normally like to stick between the 5 and the 15 minute time frame. I got friends and students that they stick to the 5 minute and the 10 minute on 15 on GBP USD, and all they do each and every single day is during the session that they like to trade, they're looking for their setups, their continuations, their order blocks, whatever the case is. They're looking for entries to continue price to the downside or the upside, right? Prime example, here's this candle that mitigated this candle here. Comes back, gets mitigated here. Comes through, hits the week low. That is a trade where you can intraday or day trade this move. And it's a trade where, it's tight stops, 6, 7, 8 pip stops, and TPs not very big, going back to the low, 23 pip TP. But what does that offer you? It offers you a trade where you're getting a phenomenal risk to reward opportunity, a 1 to 3, and this trade only lasts roughly 1 hour. So usually when I look at people who are day trading the market, obviously you can hold this deeper. Maybe you put a fib on it. Maybe you took it to the negative 27. You would have cashed out better RR 1 to 4, whatever the case is, right? This is hindsight right now. But what I'm saying is in regards to it, trading this specific style and understanding that day trading, all it really consists of, in the simplest way of putting it, is simply taking trades on lower time frames within the same day or the same session, right? I know people that'll take this sell, price goes up, it breaks up above, and then, on the next opportunity, maybe they're taking this buy, right? They're taking this buy for whatever reason, blase, blase, blah, doesn't necessarily matter. But what I'm saying is day trading is on a lower time frame specific, and you're in and out of those specific moves within the same sessions. Now, swing trading is finding trades maybe off of a higher time frame. For example, finding a relative imbalance and then taking that imbalance and then getting into that trade and then holding that trade out for 2 days, 3 days. Or maybe it's even like this setup, taking a fib from the high to the low of a higher time frame. These were my back 2017, 18, I thought I was the baddest motherfucker in the entire FX industry because my trades were going crazy, and I would take these trades 61, 71, 78, 6 off the fib. These trades would run the distance, 300 plus pips, and I thought I was the baddest motherfucker to ever walk the, God's green earth because of the fact that I was finding these higher time frame impulsive moves. I was timing the pullbacks or the corrective waves, and then I was getting in a discounted range in the fib, and then I was riding the market for the next impulse. That's all that really is. But understanding time frames, understanding where you're at in price. That's why it's so important to understand that price doesn't know time and time doesn't know price. You got to know where you're at in the bigger picture of things to understand where you're at in the smaller picture of things. Now we can come into this zone, refine our entries, get better entries, whatever the case is, blase, blase, blah. But in regards to it, if you're trading a specific session, then you need to understand the higher time frame and the lower time frame. But in regards to swing trading versus day trading, my very simple approach to it is day trading is taking multiple positions within the same session or in the same day, and it's usually opening and closing positions within the same day. Maybe you're trading lower time frame London, maybe lower time frame New York. You're in and out within the same day. I would say H1 is a max time frame you're looking at. Swing trading it could be H1 to the weekly, monthly time. I would say to like the daily, weekly, because after that it goes into position size trading, and we don't really do that. But swing trading is anything from the 1 hour and above, and you're potentially looking at only taking a few setups a week, maybe 2, maybe 3, maybe depending on how many pairs you trade. There's multiple things lining up, but that's going to be one of the biggest differences between, day trading versus swing trading and the way that we at TradeStar like to look at the market. So I hope you guys enjoyed this video. I enjoyed making it for you. See you guys in the next one. I hope that this video helped you understand if you prefer day trading or swing trading, if you prefer lower time frames in the session, or if you like swing trading, taking a few positions during the week. Me personally, I like to day trade NAS and I like to swing trade FX. But at the end of the day, as long as you're staying consistent to what it is that you can consistently do, I think you'll have a good time within your journey. So with that being said, guys, make sure you join the Discord. It's the first link in the bio. We're doing free calls every single week. We're going to be dropping a Black Friday promo. Hopefully you guys see this. The promo is already out. But guys, make sure you join the Discord. Make sure you're active on the Zoom calls. We're doing free calls every single week alongside the premium calls. Make sure if you enjoy the value you're getting in the Discord that you go ahead and sub up to the premium subscription. I promise you it's worth it. And on top of that, guys, we wish you a happy holiday season, and we'll see you guys on the charts. Peace.